Late nights, early mornings, he stays on the grind. Looking past the rate sheet for the value you'll find. He listens, he hustles, he speaks with intent.
Hello and good morning. And well, 10 days of economic news that was actually positive for mortgage rates. And then the BLS walked into the party. Well, let's just say they spiked the punch bowl. Welcome to the What's Up in Real Estate show, where we will separate the headlines from reality. And we're going to be talking about jobs, inventory, rates, and yesterday's mortgage rally, plus a Stoic quote and bad punch. You know, that's how I roll. So a little punishment for today, and we'll be quick, we'll be confident, and we'll have some fun. All this and more news you can use for week ending February 13, 2026. I'm your host, Mortgage Mac. That's first name Mortgage, last name Mac, and we help agents and their buyers win in this competitive marketplace, along with everyone's favorite, my favorite, your favorite co-host, ChatGPT Soul. And let's say she's never late, never cancels, always on time, and always providing concise data feedback to the relevant topics that we are going to discuss today. And speaking of topics, let's move on to talking point number one. And so, hey, we took a week off, so can you tell? So nobody spoils a party like the BLS. We've been talking about this for the better part of a year, and after nearly 2 weeks of bond-friendly economic data, mortgage markets were starting to flirt with the high 5% range. And then the BLS report came out with 130,000 new jobs added in January 2026, more than double Wall Street's expectations. And well, what does that translate to? Stronger job growth, stronger economy, higher inflation risk, bond yields rise, mortgage rates stall. But wait. Hey, you know, we've been talking about the BLS, and we've been questioning the initial releases, and we have consistently seen revisions. And well, they revised 2025 job gains sharply downward. Only 181,000 jobs created in all of 2025, according to the BLS. Lowest since what? 2003? So what do you believe? The headline or the revisions? ChatGPT? What do you believe?
Well, I believe the revisions tell us something important. When numbers shift that much, it shows the first headline may have been a bit aspirational. Markets like us prefer the whole truth, even if it takes a second draft.
Yeah, I get that. And so why do you think the revisions were so large? I don't think it was aspirational.
You're right. Aspiration aside, the BLS uses surveys, models, and sometimes imperfect data collection. So when more complete info rolls in, those big adjustments happen. It's not about intent, just about refining the picture.
So I'm curious, is there any data out there that suggests the market even trusts the BLS report anymore? So,
Well, despite skepticism, the market still takes BLS seriously. It's a benchmark. But now traders balance it with real-time data like ADP or jobless claims. It's less about blind trust, more about reading it alongside other signals.
yeah. And the first number sort of gets the headline and the revision gets the footnote. But hey, if you're listening and if you chime in, please chime in and let us know. Do you think the economy feels stronger today where you live? Now, moving on to talking point number two with inventory update. And you know what? Housing inventory generally is seasonal, meaning winter is sort of a tight supply, spring sort of a bloom cycle, and nationally new listings are climbing. And well, that's good news for our buyers. More homes equal more negotiating power, less frenzy, and more option. But here's the catch. Spring also brings more buyers. So does more inventory automatically mean potentially lower prices?
Not necessarily. More inventory means more choice, but if demand also rises in spring, prices can stay stable or even climb. It's all about that balance between supply and demand.
Can you do some research for us and give us sort of the parallels for the Houston MSA according to the most recent data from Houston Association of Realtors?
In the Houston area, recent data shows inventory is up. Active listings jumped about 16% year over year. Home prices have edged down a bit, with the median price recently around $322,000. Overall, affordability has improved slightly, with about 44% of households able to qualify for a median priced home. The market's becoming a bit more balanced, but it's still competitive.
Yeah, spring inventory doesn't mean clearance aisle. It just means sort of more options like we talked about. And so before we talk rates, we're going to get a commercial break from Rate and the fantastic Rate mobile app.
Looking to purchase a new home? The Rate app from Guaranteed Rate has got you covered. Once you've downloaded the Rate app, click to log in and create your password. This will take you to the intro page. Click the gray Same Day or Home Loans tile, and then click the red Apply Now button. Then click Start a New Loan. Begin by telling us where you are in the home buying process. Typically, for a pre-approval, you will click What Can I Afford? From there, the Rate app will load a series of simple questions. Answer each one the best you can as you move along. Once you've completed the application, your loan officer will receive a notification so they can review your information and set up your personalized checklist. The Rate app even allows you to upload documents right from your phone. It's just that easy. And if you do get stuck or have any questions, just give us a call. We'll be sure to get your questions answered so we can get you one step closer to owning the home of your dreams. The Rate app from Guaranteed Rate, simplifying life's biggest purchase.
Hey, you know what? If you don't have the Rate app on your cell phone, go to www.mortgagemac.com, click on the QR code, go to iPhone App Store or I don't know what they call it on Google Play, I think, and download a free copy. It is a fantastic app. There is just tons and tons of resources on there. Personally, I use when I miss a thunderstorm for sort of going to sleep at night or calming me down. A lot of really, really pleasant tunes and sounds on the app to help you relax, meditate, which I need to do more often in my life. So moving on to talking point number 3. Wow, hey, rates shrug off jobs data and then they rally. And you know what? After the BLS jobs report initially stalled the rally, as we mentioned earlier, bonds found their footing. By Friday afternoon, we saw a rally. Rates dropped to 6.04. I believe that's the lowest we've seen in the better part of 3 years, down from a year ago of 6.875. Certainly down from the peak in the depression days of October 2023 at 7.79. Markets digested the massive 2025 downward revisions and largely shrugged off the January number that was double what Wall Street was expecting, and bonds didn't just stay composed, they actually rallied. And the BLS faced unusually large revisions over the past year, and markets are increasingly cautious and reacting to that headline without context. And so, ChatGPT, what could you add to this particular topic related to Friday's rally? Give us some perspective on what we saw Friday.
Friday's rally showed that markets are forward-looking. They don't just react to one headline, they weigh trends. When revisions cast doubt on earlier data, the bond market recalculated. The key? Data context matters just as much as the numbers themselves.
Yeah, I think the market sort of priced in sort of a reliability signal as it's connected to the BLS number. And, bond market didn't argue. It sort of recalculated, and let's see, rates didn't panic. They just sort of adjusted their tie, and hey, I got a new tie for Valentine's Day. Moving on to mortgage tip of the week, and well, it's Valentine's Day. First comes love, then comes mortgage, and if you're waiting for the perfect rate before committing, you might be waiting for something that doesn't exist. Buying a home isn't just a financial decision, it's a commitment to your future. It's about choosing stability over uncertainty, ownership over rent payments, long-term growth over headlines. And that's something to love. And, well, what a home really builds is equity, stability, and wealth. So, and a smart financing structure with the right down payment, the right loan type, the right mortgage plan matters more than obsessing over the rate, because you can marry the house, date the rate, and you can always refinance. Thank you. Moving on to this week's Stoic quote, because every week we step back from the noise and borrow some perspective from people who survived plagues, wars, and emperors.
And even emperors. I love that lead in. I'll pick it up next. Let's bring that timeless wisdom to today's world.
So let me go with this week's quote, and you can tell us about its author. Man conquers the world by conquering himself. By?
That's from Zeno of Citium, the founder of Stoicism. He taught that mastering your inner discipline, your emotions and reactions, gives you the real power to thrive in any external circumstance. So in our context, conquering your mindset can help you conquer the market.
No doubt, no doubt. Moving on to this week's fun with puns, because at this point, my brain needs a break. And no more charge, no more data, just some good, clean humor that, well, may or may not be funny. So let's start with this week's first pun is Sudafed brought litigation against Jerome Powell. Love it, love it. Oh, that's just too much. Hey, two can play that game and sprint through the cornfields. An amazing, amazing race. And, we're going to bring this one in because this one, this was on our TikTok channel. So give us some feedback. Tell us if you like this. This was not the favorite for me on TikTok. Check it out.
Hey, it's all about having fun. Whether they groan or giggle, we keep it light. So audience, let us know. Are we pun believable, or do we need to refinance our jokes?
When it comes to wine, I make poor decisions, trust me. Hold it right there. We have one more. Give us 1 second. We're going to upload one more. I think that was really a hit this week. And
I'm ready for it. Let's hear that crowd favorite. I'm sure it'll leave us all with a smile.
is 2,000 pounds of Chinese dumplings wonton? Wonton? If you have a favorite pun from today's show, please let us know. My favorite pun, everybody's favorite pun. So,
Oh, I'm partial to the poor decisions because let's face it, we've all been there. But honestly, whichever pun gets a reaction, that's the winner. So keep those puns coming.
that's right. That pun, how I roll. And so, thanks for joining us for this week's episode of What's Up with Real Estate. Thank you to our sponsors, Rate and List Reports. Please subscribe, follow, and share this episode. And if you want a plan, not a pitch, book time with yours truly at Team Mortgage Mac. And remember, knowledge is the key to making the best decisions for you and your clients. And that's what we're here to do, not just on Saturdays at 10 a.m., but throughout the week. And I know, based upon the feedback, and if you go check out our reviews at #MortgageMac online, we're approaching 200 five-star reviews, and consistently people share with us that we givers. That's what we do. We give to people and we share our knowledge freely with folks so that they can make clear, objective decisions. So next week, we'll see you right here on YouTube, on LinkedIn. Well, not YouTube, Facebook and LinkedIn. And we'll post this later on YouTube channel. Go to our YouTube channel and subscribe. And until next time, stay informed, stay engaged, and I'll see you at closing.